Hey everybody, hope y'all had a great weekend, Father's Day, and for everybody out there today enjoying the special day off for our new holiday, Juneteenth, getting a day off paid, always a good thing for working people. Yay team. Anyway, I want to welcome you to the show today. This is the third show we're doing, and I want to say I'm really grateful and happy that you're here today. Kind of an odd day with the market being closed, but we had a couple of odds and ends and some stuff I thought was important to go over with everybody today. The first thing I want to say is, I know over the first couple of shows, I've sounded pretty negative. I don't want to come off as the prophet of doom, as a guy who thinks the world is coming to an end. It's just not like that. Let me talk a little bit about my experience back in 2007, 2008. Back then we were going through the same type of real estate mania here in Las Vegas and around the country that we've gone through recently. Actually, this recent one is even more crazy than that one was. The big difference being back then, people were doing purchases with 100% financing, and a lot of people with not very good credit were getting 100% loans. But anyway, back then, I was questioning the market very much like I have been this year through last year, and then earned myself the nickname in the office from all the guys of either Dr. Doom or Dr. No. But I kept asking the same question. Do you really believe that every bellman and busboy in Las Vegas can live in a $500,000 house? Is that realistic? Does that make sense? And back then I told everybody who would listen to me to buy silver. Back then, silver was about $5 an ounce. It was vastly underpriced. And of course, everybody thought I was crazy and wouldn't listen to me. The only one who did was my kid, which is kind of an amusing story because he started asking for silver for his birthday, for Christmas, for all the gift-giving holidays. And the whole family was giving him bunches of it because it was so cheap, $5 an ounce. And he ended up with about 500 ounces of silver. When it hit $18 an ounce, I want to tell you, this was the happiest 14-year-old I ever saw. He's like, this investing stuff rocks, man. Well, I try to make him understand that it doesn't always work out that way. But sadly, he was the only one to profit from what I saw. And then naturally, we all know what we suffered through 2008, through all the way through 2012, when the market in Las Vegas bottomed out at a median price of $118,000, which people wouldn't, even I wouldn't have believed it could possibly go that low, as negative as I was feeling about the market. And I'm seeing a lot of the same things that I'm seeing now. So it's really difficult having lived through that. So, it was a while ago, but not forever ago. It's not like the Great Depression or something like that. I lived through this, and it's hard not to come to the conclusion that we're probably going to experience the same ending or something similar. So, if I sound negative, that's kind of the reason why. I promised in the beginning that what you're going to get is the truth from me, at least the truth as I see it. Anyway, moving on to something a little more positive. I wanted to thank everybody for all the comments and questions. And you guys are really an engaged audience. I think it's pretty awesome. Even the smallest details get noticed. It's awesome. So I just wanted to address a couple of those today. Yes, this is a Buffalo Bills mug, okay? I was born and raised in Buffalo. I've been a Buffalo Bills fan my whole entire life. I call it the ultimate endurance test. And if you're a football fan, you know what that means. People asked about my desk. Is it like a prop? They commented on the way my desk is set up. Not a prop. This is my office where I work every day, not a studio, not my parents' basement. And it's not a set. It's my office. So there were a lot of great questions. One of them had referred to the phrase schmuckatelli. I come from Buffalo, New York. I'm an Italian guy. And back in my old neighborhood when I was a kid, Schmuckatelli was used as a term of endearment, like Joe Sixpack or an average Joe or something like that. It was a word that we used to describe the regular working guy who always seemed to get the short end of the stick on everything. So I use that today, and I still really feel like not only does that describe the people who I talk to every day, but myself. You know, I'm not so fancy. I'm certainly not rich enough to get past that. So that's the reason for that. I don't use it as a derogatory term or anything in any way negative. Okay, moving on to some stuff that might be useful to you guys. Over the weekend, it was kind of a nice, quiet weekend. So on the weekend, me personally, I like to spend a little bit of time in the morning when I'm by myself and, you know, my wife's not awake yet, and just me and the dog sipping coffee. And I read the newspaper. It's one of my little pleasures in life. I'm a reader, and I love to read the newspaper. Been a lifelong newspaper reader. So as I'm going through the paper on Saturday, here's the headline in the Las Vegas Review-Journal for the business section. Home sellers dropping prices. Now, we've been talking about that over the first couple of videos. This is the first cracks. Prices up until this very point, pretty much very recently, like the last week maybe, have been going up like crazy. Literally jumping numbers that are astounding. Houses going up $20,000 a month. Well, now, people selling houses are realizing that that party's over, and now 14% of all the listings in Las Vegas have already reduced their prices. So the first cracks in the armor of the real estate market are starting to show already. And if you look at some of the other statistics regarding home purchases, the amount of loan applications, the amount of new houses that are being bought up, the amount of listings that are available that haven't sold and that have been staying on the market longer and longer, the party's over, man. It just really is. And ultimately, it'll end up as a good thing because guys like us, regular working people, will be able to afford a house again, which would be a wonderful thing. Then, as I was going through the paper on Sunday's paper, this was interesting. I've been talking about, actually on Friday, I talked a little bit about how the private equity guys have been very quietly getting into the real estate market, scooping up commercial properties, apartments, single-family homes. I talked a little bit about Blackstone, giant landlord now. So I was reading this article, Buy and Bust. What happens when private equity comes for the rural hospitals? And I talked about how our Wall Street friends have been buying up all these small rural hospitals in Nevada, between the north and the south. Between the south is all pretty much Las Vegas and the area around it. In the north, there's the Reno, Carson City and the areas around it. And in between is a lot of small mining towns and small towns that rely on these rural hospitals. But what was happening is the private equity guys are coming in, buying up these hospitals with big promises to how they're going to expand them and keep them open and the service they're going to provide to the community, getting all kinds of concessions from the community. It said they've received over $20 million in Nevada just in the COVID relief money to these rural hospitals. Now, guess what? They're closing them all down. So they sold off what they could sell, they got whatever aid they could sell, and they're leaving these rural communities without any medical care because they're such wonderful people. And then the grand finale, the coup de grace. And this really isn't so much about finance and what we're going to deal with in the markets, just talking about the quality of life we're going to have here. This was a great one. Lights out. Rolling blackouts coming this summer. People in the West and the Midwest, get prepared because the demand on the grid is going to exceed the supply. And the power companies are going to have no choice but to institute these brownout blackouts. It happened in California last year. It's likely going to start spreading around the country more and more. It's going to drive energy prices up like crazy. It's going to be very uncomfortable. I don't know how you can turn the power off in Las Vegas for a few hours at any time during the summer. People are going to try and be without air conditioning, really? So things just seem to be on downward slide. This is the new normal we're going to get. It's going to be a lot of bad news coming. So, don't blame the messenger, right? Things are happening that you need to be aware of. You need to get prepared for. And I don't want it to sound like it's negative, because it isn't, if you use the information you're getting constructively to prepare yourself and protect yourself from this stuff that's coming up. The weekend news was a calming news in the markets, but the rest of everything, not so much. Okay. I want to take a minute here to talk about crypto and Bitcoin. Right now, Bitcoin is bumping at the $20,000 mark. If you're a person who reads charts, most don't probably, but there's things in the investing world called resistance and support levels. A lot of times there are certain trading patterns. It's getting too technical, but in a lot of cases it's round numbers like 20,000. Support for some reason just seems to come around these round numbers. Look at the Bitcoin chart, you'll see that support in the past. I believe that if Bitcoin breaks through $20,000 on the downside and stays there, it's bombs away, man. There just doesn't seem to be much support underneath that. I was looking at these charts, okay? I was trying to figure out what could I compare this to make you understand what I see, okay? And what came to my mind was the infamous or famous Tuplip Mania back in the 1600s. Now here's a chart of tulip prices. And the mania, you can see this giant surge in prices. And the mania, over this 3-year period that this chart lasts, how it shot up to the moon and came right back down to earth. So I wanted to compare this chart with what the Bitcoin chart looks like. So here's Bitcoin's chart. Now this chart is 3 years. This one's a little bit longer. This is 6 years. So let's go back to a 3-year period, and this is what Bitcoin's chart looks like. Okay? See these two side by side? The similarities are astounding, right? Now, the big difference being, of course, Bitcoin had this big rally here from its first time going down the mountain, and it hit its resistance, and it pretty much couldn't break through that resistance. Now you can see the result. Here's some support, a little bit of a rally, which I'm guessing smart money was selling into that rally. And now it's starting to look a lot like the South Sea bubble, or the tulip bubble, how it's finishing. So I know these truths are unpleasant, especially if you're a holder of crypto, if you're a holder of Bitcoin. I don't put this up for you to yell at me in the comments and be mad at me. I put it up for your information, just so you have a little bit different perspective. Sometimes when you're involved in an investment and you have your money on the line, and you've had success with it in the past especially, it's hard to believe that it's hard to have a proper perspective, to keep it all in the right perspective, and sometimes something that even if it's unpleasant to see, is going to benefit you as an investor, okay? Now, moving on from that, let's talk about this recession that's coming. I believe we're already in a recession. I believe the second quarter GDP will be negative, and we'll get that report in July that'll confirm that we're already in a recession. I think that the Fed is preparing for that recession. It's all inflation driven, as you know. Prices are still going up. I paid $5.69 a gallon today to fill my tank. The problem with this recession, and the reason I think it's going to be extra painful, is in the past, when we've had a recession, or even the threat of a recession, going back to even, say, the dot-com bubble busting in 2000, the Fed has their toolbox and their playbook that they use pretty much every time. And they're going to cut rates and try to stimulate the economy out of a recession. Well, how do you do that if it's your stimulation that caused the recession in the first place? If the economy is already so overstimulated that you have to cause a recession to get demand back to normal, how do you stimulate your way out of that recession? I don't see how it could possibly happen. I don't think that what's the old saying that when you're a hammer, every problem looks like a nail? Well, when you're a hammer, even you realize that if the problem is a glass vase, the hammer is going to be pretty ineffective. And I think that's kind of where we're going on this coming recession, or recession we're in, coming to be confirmed. Anyway, today's a holiday. I'm sorry to neg you out with what I see is coming up in this market. Batten down the hatches this week. I think that, there's going to be a lot of pressure on the markets. I want to really be interested in seeing what happens in the debt market. I'm going to be following the 10-year closely, because if that 10-year rallies, only one thing's causing that. It's going to be our friends, the government, keeping the market liquid. Somebody has to be the buyer of last resort, and I guess that's their job. But anyway, we're going to talk more about that bond market. We're going to talk about long-term capital management, the crash they had, biggest government bond trader in the world, facilitator for the Treasury, and when their crash happened, how they dealt with it. We got all kind of good stuff coming up in the future for you guys. I really appreciate you taking the time to watch today. Of course, please like, comment, share it with your friends, and if you haven't already, subscribe. In the comments, please feel free to ask questions. I fully intend to answer some questions every day on the show, unless I'm running over with time like I am today. I look forward to talking to you guys again tomorrow. The markets will be open. We'll be on after the markets close at around 1:30, 2 o'clock. Let's see where we start this week at. Tomorrow's Monday for Wall Street.